Welcome back to Morning Trade Live. Stocks are still up and holding, so we'll let them do their thing. Let's talk some international trade versus the U.S. Of course, this year it's been better to be abroad. Paulina McPadden joins us from Baillie Gifford, investment manager of the International Concentrated Growth Equities Fund. Great to have you here, Paulina. Good morning.
Good morning. Thank you for having me.
So today we're kind of excited because we're finally getting U.S. stocks to bounce, but obviously the story of the year has been the shift into the international trade. Do you think there's a specific policy catalyst? Is it really all this tariff stuff, or was this just kind of a ticking, not a time bomb, but a good version of it?
Well, I think it's important to take a quick step back first and remind ourselves that Baillie Gifford is a long-term growth investor. So we're looking at the next 5 or 10 years. And in order to invest well over that kind of time frame, what you really have to be thinking about is the fundamental performance of the companies that we're investing in. Are they addressing really big structural growth opportunities? Are they demonstrating deepening competitive advantages? How visionary are their management teams? So we tend to focus very much on these bottom-up indicators. That said, I think that there are some big picture macro reasons why international is doing well and should continue to do well in the future. So the first thing I would point out is the US at the moment represents about 60% of the global market cap, and I'd compare that to the US being 25% of the world's GDP, and that is an interesting discrepancy. If you go back into history, in 1988, Japan was 40% of world market cap and 15% of GDP, and I think we know what happened after that.
Interesting.
The other thing I'd pull out is that international equities are a really large opportunity for public markets. So there's 48,000 listed companies outside the US, and it's a growing market. 85% of IPOs last year were outside the US. Probably that number should be even higher, actually, because quite a large proportion of US IPOs were cross-border transactions.
To come back to kind of the US-Japan analogy, for the discrepancy between market cap versus actual economic productivity. What about potential, though? I mean, apparently we've got the AI machines here. Isn't that kind of where the market cap skew is coming from, all that stuff in big tech?
I mean, you make a good point, because GDP at its heart is a backward-looking indicator. It's about what has happened to the economy, how it has grown, and the stock market is a reflection of what the expectations are going to be. But I think if you do look back in history, when you do have these big discrepancies, they do tend to self-correct to some extent. Now, there are reasons for why there should be a gap for the US in that sense, because it's a very stable environment for businesses to operate in. Right. There's really helpful regulation.
We deserve a good bit of our premium, maybe not all of it.
Absolutely, but I think that there's so many exciting businesses outside the US that they should be getting some attention as well. You know, you look at Nu in Brazil, for example, and it has an 85% lower cost of servicing its customers than the incumbent banks. You know, that should grow like a weed.
When you look at the international exposures for when clients are talking about maybe buying your fund or just shifting their portfolio generally into the international realm, do they want big blocky exposure to countries, regions, or does it really need to be highly equity specific? How much kind of risk is there on the stock specific front?
Well, we're fundamentally bottom-up stock pickers, so we don't really think about, arranging exposure to suit a particular country more than another from a risk perspective. We're looking at it from an opportunity perspective.
So you're just running your equity screens across the whole world.
Absolutely. And one of the things I'm thinking about at the moment, for example, is the role of China. Over the last 3 or 4 years, we've really reduced our exposure to China over time. There's been a difficult political environment. It's not really been great for entrepreneurs operating in the domestic market, but there's signs that may be turning. Famously, Xi Jinping recently shook Jack Ma's hand, for example. We've not seen him for a few years. Right.
Yeah, he kind of disappeared, came back right when the market started firming up.
But also the valuations. You're looking at a company like PDD, which is currently trading on at 8, 9, 10 times PE, but it's growing 100% a year.
Yeah, and here too.
Yeah. All
over the place. How much do you guys like that stock? Because I feel like when it comes to consumer retail, Temu's kind of the story right now.
I think it's a really interesting one. It's important, specifically with companies like PDD, it's important to sort of balance those risks and opportunities, because there's a decent chance that company goes to zero, that there might be something going on behind the scenes that isn't quite right. But at the same time, we've done quite a lot of due diligence. We've engaged with merchants on their platform. We've engaged with their competitors. They're a really hard-working bunch of people. They work their people super hard, and you're seeing the results of that coming through.
What do you think the potential, what's the risk of how they're running their business model? Because, some of the stuff they're selling dirt cheap, and they're also, it seems like, doing a little bit of marketing kind of advertising where you see something and you click through and it's like not even close to what it is.
I think that's always a risk when a company scales up quickly. But I think I'd point out two things. One is that this is a company that there's almost like a barbell approach, I think, when you're looking at companies like this. So there's the companies that are servicing the increasingly wealthy middle class. So you're thinking of your Hermes, your Ferrari.
Right.
These are the hugely durable brands that will probably endure for the next 100 years. And then on the other side of the barbell, you have the companies that are serving the lower income consumers. And for PDD, that is increasingly in Southeast Asia, for example, where it's starting to move into Indonesia, Thailand, Vietnam, those sorts of areas. So
Here a little bit too. But okay, let's talk other exposures on the tech side. ASML, TSMC, a few of those, since we've got a very tech mindset here. Are those, one, I'm thinking about TSMC and the connection with Intel. Maybe give me a thought on that real quick, because is that a sign that they want to maybe have a cheaper way to just kind of get planted in the U.S.? Or is it cheaper than building a bunch of your own plants?
Well, I think TSMC is a fascinating company. We've been shareholders for a while. For me, it's much more about just the long-term growth opportunity in computing, full stop. They've dominated the space. Now, if you want to build a chip, you basically have to go to TSMC if it's leading edge, and the cost to develop the next version of fabs is increasing every year. There's only one company in the world that can afford to do that. I think Intel's basically out of the picture in that sense for now.
So you don't think the rumors are going to be true, that there's going to be some big partnership? Because they were even saying some other names might get involved too, to use their foundry.
We'll see what happens, but I'm just betting that TSMC continues growing.
Right, okay, so you don't have to have a bet on Intel. The point is bet on TSMC, basically. Anything else that we wouldn't, like any wild cards? Like you mentioned the bank in Brazil. Anything else for us, like a juicy one that we?
Oh, I quite like Coupang.
Oh yeah.
So
okay.
yeah, so this is the South Korean retail e-commerce player, and they're basically leveraging this phenomenal logistics advantage. They can service quite a high proportion of apartment blocks in South Korea 4 times a day. That's the number of times that they can deliver a parcel to that block.
Wow.
And so they're just taking share of e-commerce, and then they're also taking share of offline retail as well, and that's a really interesting growth story.
Great stuff, Paulina. Thanks a lot.
Thank you very much for having me.
Appreciate the stock picks. Love the macro take on the international story. Paulina McPadden, investment manager of the International Concentrated Growth Equities Fund at Baillie Gifford.